So, there was this event celebrating the 30th anniversary of H share listings, and the vice chairman of China's Securities Regulatory Commission, CSRC, Li Chao, spoke there. He talked about how the CSRC is all gung-ho about boosting cooperation between the two stock markets, making things work better, you know. They want to smoothen out the system that lets investors trade between the two places and also bring in new things like block trading and REITs as investment options. The whole idea is to make it easier for foreign investors to jump into the market for the long haul. H shares, by the way, are shares of mainland Chinese companies that get listed on the Hong Kong Stock Exchange. It all started with Qingdao Beer back in 1993, and Li Chao thinks this marked the beginning of mainland companies joining the Hong Kong party. It's like mainland companies took a liking to the Hong Kong scene, and that's played a big role in Hong Kong becoming a hotspot for global finance. Plus, it's given a real boost to China's economy and companies as well, kind of a big deal, you could say. According to Li Chao, listing Chinese companies in Hong Kong has been like a guidebook for making our own mainland market even better. You know, things like securities laws, financial rules, and how companies are run. It's also opened doors for Chinese companies to get resources from all over the world. And guess what? Global investors get a slice of China's economic growth action, which is sweet. As of now, over 1,400 Chinese companies have set up shop in Hong Kong, which is more than half the total listed companies there. These Chinese companies make up about 70% of the market value and a whopping 80% of trading volume. Hong Kong's like a second home for them, and they're a big part of the market there. But that's not all. There's this thing called the Shanghai Hong Kong Stock Connect and Shenzhen Hong Kong Stock Connect that has made trading between these two places a real success story. These connections started in 2014 and 2016, and they let you invest in stocks across the borders, which is pretty cool. It's like they took the whole one country, two systems idea and put it to work in the stock market. People have really liked it, both from China and outside. Since these Stock Connect things kicked off, they've added more types of stocks you can trade and made the whole buying and selling process smoother. And get this, they brought in around 1.95 trillion yuan for the mainland market and 2.34 trillion yuan for the Hong Kong market by July. That's a good chunk of change. These connections have also played a role in getting more foreign money into the market, improving how the A-share market works, and keeping things moving in Hong Kong. By the end of July, about 80 mainland financial companies had set up shop in Hong Kong, and with new stuff like ETFs, exchange-traded funds, cross-border wealth management, and Hong Kong A50 index futures, plus some other financial wizardry, Hong Kong is turning into a place where East meets West in the financial world. Li Chao ended his talk by saying the CSRC is going to keep following the plan laid out by the higher-ups. They want to keep making the two stock markets work together in a practical way. First, they're all about Hong Kong being this awesome platform for Chinese companies to get funds. They want to make the process of listing overseas smoother and more transparent, so mainland companies can keep on listing in Hong Kong. Then, they want to add more types of trading options between the markets, like big trades and REITs, to make it even easier for foreign investors to get in. And lastly, they want both markets to open up more stuff, supporting Hong Kong in things like government bond futures and beefing up risk management tools. All in all, it sounds like they're determined to keep these two markets working together like a charm.